Hello, fellow traders. 'Tis I, the Rumpled One. I've had a couple of questions about the Virgin Wick Zone and the donationals. So I thought I should make a video and show people how to use it for profit. Now, remember, boys and girls, these videos are for educational purposes only, and your results may differ from mine, and that trading's very risky. So, if you're seeking advice for trading, finance, or investing, seek and get your advice from an accredited financial professional, somebody that has a certificate on the wall, proudly displayed, letting the world know that they're a certified and accredited financial professional. That way, when you take their advice and lose your money, you know you took the advice of a accredited financial professional rather than some guy on YouTube with a funny name. Okay, now, before you trade, you know you have to have your money and risk management in place because you don't want to lose more than what you're willing to lose on any one single trade. Okay, so here we go. Virgin Wick zones. Okay, that's the TRO2020 Virgin Wick zones indicator. Okay, I've got it set up for the week right now. And you can see you have a wick zone here that hasn't been touched. That's why it's called virgin. And you see just last week we've got the upper wick zone hasn't been touched. So these are places that you want to look for reversals. Because you can see here all these other wick zones have been touched. So for example, right here, this was a virgin, price came down into it, then this was a virgin, price came down into it, and then moved away. So when price gets, within here, chances are it's going to move away, or in here it's going to move away. Or it could go right through it. Sometimes it goes through it. But that just gives you a clue where to look for it. And if you go all the way back to the months, you can see some more zones. And then on the daily, you can see you really have to scrunch the chart to because of the way this chart works. Well, the way the indicator works, what it does is it looks for how many bars there are in that you can see. So even though because I have the chart shift on, there's some bars over here that you can't see, but there. See, if I didn't have the shift on, they would be in the view. So right there. So there's more virgin wicks. Then you can go to the H4 candles, and you can see there's no virgin wicks at the bottom. But if you're a wick zone trader, you can see price here dipped into this wick. It's already out. We got some more. So we're looking for price to get out of these wick zones and possibly come here and then there, because there's a nice gap right there, that weekly open gap. And then you can go all the way down to the hour. Once again, scrunching in, and there's none to be had. There's not enough. I can't go back far enough. But you can see here, we just barely dipped into these because this was a virgin wick before this happened. You see? And so right here, there was a virgin wick, but then price dipped in here, and then once again it moved up. So that's how you look for these wick zones. So they're targets. So like here, price got near. We decided to, or you would have decided to take profit off the table, and then maybe you can get in again. Now, one other thing about taking profit off the table, I was having a discussion with Walmart actually, and you see, it didn't quite hit this. See, you have 102.52. It didn't quite get there. It got to 0.497. So you were what? 2-3 pips away, 23 points away if you want to be exact. Well, if you if that was your target and you didn't exit out of that trade, you may have given it all back and maybe even stopped out. So part of the problem when you're looking at risk reward is most people think of it as a static. In other words, your entry to your TP and then your entry to your stop loss. But trading isn't static. It doesn't just go from one spot to the other. It moves, and it usually wiggles or moves up and down. And the point I'm trying to make is that as that price is moving towards your TP in your favor, that money between your entry point and the current price, that's your money. And so what would happen here is you're there. You're saying, okay, I'm going to risk another 3 pips to hit that. I'm saying, because the thing is, you're saying, actually, you're risking more. You're saying, I want these 3 pips, and I'm willing to risk from price from here all the way down to wherever your stop loss was to get those 3 pips. And that's just not smart. And that's one of the reasons why sometimes when you get about halfway to the point, you start taking half of your trade off, because you don't want price to go up here, almost hit your TP, and then reverse. So that's just something to keep in mind when you're trading. Now, see, we can move down here to the 30-minute chart, and you can see we've got a nice virgin wick zone right here. And we can move over to the 15. And you see there's a virgin wick zone right here. Actually, these are bottoms because there really wasn't any wicks. And the same is true right here. And then even on the 5-minute chart. So once again, these are areas, targets, and areas to look for price to reverse. And finally, all the way down to the 1-minute chart. And once again, if you scrunch it, then you can see those levels. And I've got it on auto here. So if you want, if 0 means auto, let the computer figure it out, but you can easily put in a number on your own if you want. And then the numbers over here, that's the distance price is from the level. And then the numbers here, that's how many bars ago. So this M1 top was 69 bars ago, 69 M1 bars ago. So that's pretty much it. It's not difficult. It's another horizontal line indicator, so no squiggly lines were harmed in the making of the indicator or the making of this video. You guys know how I am about those squiggly lines. I just can't help but tease about them because they just crack me up. So anyway, oh, and if you want to, we can look at the pound, because we were, doing some wall mall trades. And here we go right here. Looks like price wants to go and hit that virgin wick zone on the M1. Scroll through to M5. And so the other thing is, when you see this virgin wick zone and price doesn't get to it and starts, that's when you can see, okay, price is trying to move up. Then when it gets here, then you'll see, okay, price is trying to move down. I know, it's like, well, duh, but it's obvious, but sometimes people don't see what's right in front of them. And the part of the reason why is because they're thinking in terms of concepts. They're going to say, oh, well, this is a supply area, blah, 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 and this is demand. You know what? No, these are just highs and lows and candle tops and bottoms. That's all they are. We can all agree on that. We're not going to agree if this is support, if this is supply. No. So that's why I don't talk in those types of conceptual terms. And you can see here on the M30 on the pound dollar what we're working with. and then on H1. Now somebody might say, well, which time frame do you use? I usually scan the daily, weekly, monthly, because those I'm looking usually for areas of reversal. So like here on the daily, you can see here it almost hit that, and then if you put your cursor there, you see how it came through that little wick zone there. So on the way up, that was a virgin, and then all of a sudden it hit it, it cracked it, but then it fell right back through, and there's your money. Like I said, this, and we can bring it in a little bit closer. It's not that difficult when you look at it here on the daily. And if you're wondering, this is because the top and the high were the same. I guess I could probably put some code in there. If they're within a couple of pips, only show one, not the other. And here you go again. You see right here on the weekly, it hit that high and just reversed. I mean, sometimes it'll reverse, sometimes it'll penetrate, but it'll just give you an idea where to look, and then you could decide what you want to do at this level. So if you were long, you might think to take profit. If you were waiting to enter a trade, you go, hey, if it hits here and rejects, comes back down through this level here, maybe I should get short. And you can see there, that would have been a nice short, good for about 60 pips if you were still in that trade. And so that's how you can use this indicator to analyze and determine where you want to enter or exit a trade. And finally, on the monthly. And so you can see here, even on the monthly, we had a small, very small virgin wick. Price went up through it, came back down and reversed. So that's it, fellow traders, on the TRO2020 Virgin Wick Zones, one of the donational indicators. In fact, it went out on the first batch. I've got some cool ones for Walmart on the second batch, and I guess I'll have to make some videos for those. So, fellow traders, just remember, it's not what you trade, it's how you trade it. So go out there and drain the banks. Oh, and hit subscribe. And you can also hit like, and then you can copy this video, send it all over the place, and click on the bell so you know when I put out a video. And oh yeah, you can go to my Facebook groups, and if you want to, it has a how to get the donational indicators there. So that's it. TheRumpledOne signing out.